First of all, we've moved slightly beyond just Bitcoin to a kind of broader positivity in digital assets, and then the supply-demand equation. Just give me a health check right now of how you feel general sentiment is towards cryptocurrencies.
Extremely positive, to say the least. I mean, if you think about the 9 Bitcoin ETFs that are active right now, they're on pace to buy about 1 million Bitcoin per year. And I have it up on my other screen, but there's about 1.9 million Bitcoin total on all of the exchanges worldwide. And so something's got to give. And this is what's different in this cycle versus the previous cycles, where we didn't have Larry Fink buying 85,000 Bitcoin in the last 20 trading days. And so these ETFs are a watershed moment. They're 11 years in the making. That was when the first application was filed. And we've got ETH up next. It's a May 29th approval or denial date. We think it will be approved. It's basically the same case. And it's a much smaller, much more reflexive asset. And the last thing I'll say is that there's a ton of work that's happened since the big crash that happened in 2022. We've got DeFi really firing, starting to produce earnings. We've got gaming starting to bring in a lot of people. The ecosystem is extremely coherent. It's kind of hard to fade just all of the work that's happened. So I feel good.
You take on the face of it just the movement in Bitcoin, but one of the things we've been talking about this week is the offshoots, right, to other, let's call them asset classes, but take NFTs. You look at the data for NFT volume in December, really close correlation with Bitcoin. The reason I'm glad to have you on the show, Vance, is to me, it seems like a lot of that is related to what's happening in gaming, an area that your firm is really focused on.
I mean, gaming is probably the most positive story in crypto right now. And it's a story that's, again, been years in the making. But all the games that were funded in that 2021, 2022 run have just started to launch. And one in particular, Pixels, has about 400,000 daily active wallets. That's the biggest blockchain application by far right now in terms of user count. And so we're moving kind of beyond this prosumer, whale-driven crypto economy into something that's more mass market. And, people have been waiting for that adoption moment. And I think it's coming. I think it might already be here. And so you've got all these different narratives really firing: the ETFs, gaming, DeFi, ETH. What's the bear case? I mean, maybe the ETF inflows stop, but the vast majority of RIAs have not been able to allocate to these yet. And the numbers that we hear are 1% to 3%. That's what Fidelity says, of the portfolio that you should have in crypto. That equates to about $150 billion coming into the space over the next couple of years. And, we're one of the larger asset managers in crypto. Framework is, and we've had the pleasure of buying, mid 9 figures of crypto over the past 2 years in liquid markets. And this might sound strange, but it's actually hard to get the coins. These markets are not as liquid as people think. And so I think the open question is kind of what happens when that money comes in. It could get, wilder than people think, is my guess.
I remember reading about you guys 2022. Hannah Miller was writing about how you were raising money at a time where everyone was raising money. That was happening. It did not happen in 2023. Where are you focused now in the deploying of capital and your kind of appetite to raise more funds?
I don't know how much I can or cannot say about our raising plans.
It's just you and I on the show. Just give us the details, Vance.
Yeah. Look, we raised $400 million 2 weeks before Luna collapsed. And so you can imagine what that was like. And we spent that year buying. We called a lot of the capital in that fund, and really nobody wanted to talk to us when we were buying ETH at 1,000. But at 3,500, people have now turned around, and all the LPs are excited, and there's a lot more interest in the space. But let me put it in perspective for you. I was at a pension fund conference this week. It was a 2-day multi-strategy, multi-asset class pension fund conference. The crypto people got one panel at 8:30 in the morning. And, there's a ton of interest, but the pension funds and the largest endowments in the world are still behind on this stuff. And I do think in the fullness of time, when you look back and you think about what it might mean to miss the birth of an asset class, especially into an ETF style paradigm, a lot of those people are going to be, pretty upset and wondering what happened. So I think we're early.